In today's video, we're exploring 20 money truths school didn't teach you. Number 1. Income is not wealth. Many people equate a high income with being wealthy, but true wealth is measured by net worth, the total assets minus total liabilities. To build wealth, focus on increasing your assets, investments, savings, property, and decreasing liabilities, debts. This means living below your means, investing wisely, and avoiding lifestyle inflation where increased earnings lead to proportionally higher spending. Number 2. Budgets aren't restrictive. A budget is a detailed plan for your money, not a restriction. It ensures that every dollar you earn is assigned a purpose, whether it's spending, saving, or investing. This proactive approach helps prevent wasteful spending and can actually lead to greater financial freedom because it aligns your spending with your most important goals. Number 3. Emergency funds are essential. An emergency fund is crucial for financial stability. It's your own personal insurance against unexpected financial shocks, such as job loss, medical emergencies, or urgent home repairs. Financial experts recommend having at least 3 to 6 months' worth of living expenses saved in a readily accessible account. Number 4. Debt can be a tool or a trap. Debt can be leveraged to enhance your life, such as student loans for education or a mortgage for a home that appreciates in value. However, consumer debt with high interest rates like credit card debt can quickly become a trap if not managed carefully. Use debt strategically and avoid it for non-essential purchases. Number 5. Investing isn't just for the rich. Investing is the key to building wealth over time, and it's accessible to most people through vehicles like 401(k)s IRAs and low-cost index funds. Starting small and investing consistently over time, even in small amounts, can leverage the power of compound interest to significantly enhance your financial growth. Number 6. Time is more valuable than money. Time is a finite resource. Effective time management can not only improve your productivity, but also your ability to earn and save more. Valuing your time means prioritizing tasks that align with your financial goals and delegating or eliminating less productive activity. Number 7. Financial independence is achievable. Achieving financial independence requires a plan to save and invest a significant portion of your income. The goal is to accumulate assets that generate enough income to cover your expenses, freeing you from the need to work for money. Strategies like the financial independence, retire early movement focus on extreme saving and investing as pathways to early financial independence. Number 8. Money management is a lifelong skill. Money management skills are crucial at every stage of life, from managing student loans to buying a home to planning for retirement. Continuously improving your financial literacy can lead to better financial decisions and a more secure future. Number 9. Your credit score matters. Your credit score is a reflection of your financial reliability and affects your ability to obtain loans, the interest rates you pay, and even your job prospects in some cases. Building a good credit score involves making payments on time, keeping credit balances low, and regularly checking your credit report for accuracy. Number 10. Compound interest is powerful. Compound interest means earning interest on interest. It's the reason why investing early can significantly increase your wealth, as the returns you generate over time also start to generate their own returns. Understanding this can motivate you to start saving and investing as early as possible. Number 11. Financial education is continuous. The financial landscape is continually changing with new products, technologies, and laws. Staying informed through books, online courses, and reputable financial news sources can help you adapt to changes and manage your finances more effectively. Number 12. Taxes can work for or against you. Understanding how to manage your taxes can save you significant amounts of money. This includes knowing which tax deductions and credits you are eligible for, how to make tax-efficient investments, and planning for tax implications of big financial decisions. Number 13. Insurance is an investment, not an expense. Insurance protects you from financial losses that could be devastating if you had to cover them out of pocket. Whether it's life, health, or property insurance, view these premiums as investments in your financial security. Number 14. Money isn't everything, but it impacts everything. Money is not the ultimate goal, but it affects nearly every aspect of your life, including where you live, your health, education, and your ability to make choices about work and leisure. Balancing financial goals with personal happiness is key to a fulfilling life. Number 15. You're never too young to start saving. The sooner you start saving, the more you can benefit from compound interest. Encouraging habits of saving from a young age can set a foundation for financial security and discipline. Number 16. Wants vs. Understanding the difference between wants and needs is a fundamental aspect of spending wisely. Needs are essentials for living, while wants are things you can live without. Prioritizing needs and being mindful about fulfilling wants can keep your budget balanced. Number 17. Financial habits shape financial futures. Consistent positive financial habits such as regular saving, conscientious spending, and continuous learning about finances are crucial for building a secure financial future. Number 18. Money talk should be regular. Regular conversations about money matters with your partner, family, or financial advisor can enhance understanding and cooperation on financial issues, leading to better financial health. Number 19. The stock market is not a casino. Approaching the stock market as a get-rich-quick scheme is risky and can lead to significant losses. Instead, view stock market investing as a long-term strategy for building wealth through a well-researched and diversified portfolio. Number 20. Financial freedom is the ultimate goal. The ultimate aim of managing your money wisely is to achieve financial freedom, the ability to enjoy life without financial stress or the necessity to work. This involves having sufficient passive income to cover your lifestyle choices, enabling you to live on your own terms. These 20 money truths provide a roadmap to a more informed, empowered, and intentional financial life. They are keys to unlocking a future where your financial decisions support your dreams and goals. Thank you for watching, and don't forget to subscribe and share this video. Stay tuned for more insightful content that can help you transform your approach to personal finance. See you in the next video.